Welcome to the show. It's the Unfiltered Business Podcast. I'm your host, Derek Thomas. It is episode 2. On today's show, we have Marty Mullins. He is the president of Black Horse Wealth Management. He's an old friend, and we break down the basics of wealth management, of investing, lots of stuff. It was a great conversation. I'm really looking forward to it. He's I told him that I needed him to break it down as simply as possible because I have very elementary knowledge of this industry, of how these things work, and I think he did a great job. I think he was able to do exactly what I needed him to do, and I'm hoping it'll be something that you guys can learn something from. On another note, I want to acknowledge what happened last week. This is coming out on Wednesday, January 13th, and last week we had the Capitol protests, the Capitol terrorist attack, whatever you want to call it. I think this brought to light a lot of things that we as a country need to acknowledge. There seems to be quite a few people that want to ignore exactly what happened, how it happened, how they let this happen. It was insane. I mean, I don't know how else to explain it. I'm still processing the whole thing. Yeah, it's one of those things that even when it was happening, I still couldn't process it. It didn't seem like something that could happen in 2021, and it doesn't seem like it seems like something that we should be better than. You know, it's something that maybe it's tougher because I grew up here in the Silicon Valley, a pretty progressive area. It's just hard to believe that there's still people out there that would do the things that they did and not understand the repercussions, and the heaviness and the severity of what they were trying to do. And I don't want to spend too much time on this. This isn't why I started this podcast. It's not why I did the show. It's for you guys to know my views and chime in on certain, current events. But if I could lay it down in its most simplest form, it would be that we need to be better. We need to understand. We need to understand that there's things that are going on in this country that we may not want to acknowledge, but we need to. We need to realize the differences in cultures, the differences in the way people are treated, the differences in the way there's a lot of things. I'll leave it at that. Anyways, let's bring it back to the actual podcast. I want to bring this back to a brighter point because I also want to thank everybody for listening into the first episode. This was something that I've been wanting to do for a long time, and you start second guessing yourself when you start putting it out, and you don't know who's going to listen to it or what sort of reactions you're going to get. But everything's been great. I haven't had a ton of listeners, but what is there to expect from your first episode? And anyways, there's been the people have been super happy. They've been like, hey man, you did a great job, keep it going, blah, blah, blah. And that's all you could ever ask for. So if you haven't listened to episode 1, it's on YouTube. You'll find it exactly where you found this one. I interviewed Derek Tam, the co-founder of Hoppus Brewing Company here in Los Gatos, their original brewing company is in San Jose, and they just opened up their second brewing company in Los Gatos, my hometown. And those guys are doing so great. Their beer is awesome. If you haven't tried it, please go get it. And I know during all this COVID stuff, they're doing online ordering and delivery within 10 miles of the brewery. So if you haven't done that, get some of their stuff. It's great. I love those guys. Derek's a great guy, and we had a great conversation. Circling back to today's episode, excuse me, I talked with Marty Mullins, another old friend of mine. Marty's he owns his own company, Black Horse Wealth Management. He started back in May after kind of earning his stripes at Bank of America and Chase. And the dude's he's a great guy. I grew up with this guy. We played Little League together, and he just worked his butt off. And the thing I appreciate about him is that I've spoken with wealth managers, different advisors and different roles, and I've always walked away kind of knowing less than I did when I walked in, like feeling overwhelmed, not knowing what the fuck to ask. You name it, that's what I felt. And after my 25-minute discussion with Marty, I felt like I learned something. I felt like I was better prepared for the next time that I went into to go speak with someone. And that's all you could ask for. And that's kind of my point behind this entire podcast. I want to learn something. I'm hoping that you guys can take something away from it. It's like this is the point, is to learn, to grow, to evolve, right? That was the idea behind this entire podcast. So I'll stop blabbering. Please enjoy the show. Without further ado, Marty Mullins. All right, joining us now, we have Marty Mullins on the Business Unfiltered podcast. He is the president of Black Horse Wealth Management. Thank you for coming on the show, Marty.
Oh, thank you, Derek.
Yeah. So this is a show I've been looking forward to a lot because I'm going to be totally upfront with you. My knowledge on wealth management is very elementary. So you're going to have to speak to me like I'm a kindergartner, but I am super excited about this. So I wanted to know kind of your initial draw to the wealth management side of things. Was this something you studied in college? Was it something that you knew in high school that you wanted to do? How did that all get started?
Yeah, I actually studied business economics at UC Santa Barbara, and that was my initial kind of segue into money. And I remember a long time ago, my mom said, "Marty, you have this money in your savings account. What do you want to do with it?" And I said, "Well, leave it there. I'm in high school, college. What am I supposed to do with it?"
Right.
I took an economics class, and they said, "Hey, you can make some percentage of interest on your CD." And I went, "Hey, Mom, let's do that." And she said, "Okay, great." And that was probably my first learning lesson myself, of educating a little bit of what you can do with your money.
That's probably like the most important thing you could learn at that age. Because I think for the most part, people are like, all you hear is like, save your money, save your money. But in reality, like, you're not really doing anything with it. Like, it's probably the worst advice you could get.
Yeah, no, absolutely. And, as you go and you get a little older, we graduated in 2010. So right after the financial crisis,
right?
I didn't even know what that really meant until you joined the work world. And I'm sure everybody graduating now is going to say the financial crisis of COVID, right?
Sure.
I started as a bank teller making minimum wage. And the grass is always greener on the other side. I looked at everybody else working and said, those people are making a lot more money than me. How do I get there? Right. And so I asked them that question. And, I've talked about in the past about asking questions, right? And I like to take them out to coffee or lunch and just pick their brain a little bit and say, "Hey, what got you here?" Right? Same questions you're asking me. And, trial by error. And some people were nicer than the others. They wanted to give up more information of how to help you. And you organically can grow basically from asking them their experiences and try to kind of mimic it a little bit.
Right. I mean, I actually just had my mentor on the last episode. I'm not sure which one will come out first, but I cannot stress the importance of asking questions. Like, it really is a superpower, right? It's like being able to go, "Hey, that's something that I want." Chances are they're willing to help you. Most people want to help each other. So why not show some interest? You're already showing that you're a hard worker,
right?
Offer up to help them, take them to coffee. Like you said, like it's an easy way to not only grow friendships and like better your working experience, but to grow in your career.
Yeah. And your professional network as well. Right. And I was in a business working at a bank where not a lot of people know what happens inside of a bank, right? If I asked you what a teller did or a personal banker did,
no idea.
Probably do all the same thing, right?
Right.
In reality, what happens is that person, a customer, will walk in and say, "I have this issue or whatever. I want to do something with this money." And you get to learn about their life now, right? And it's about asking those questions. And so you go, "Well, what do you do for work?" And being self-employed, you and me and everything, you like talking about what you do, right?
Right.
And so a lot of people will give more information because it's an exciting topic and we like talking about it.
Sure.
So it is about asking those questions.
Well, it's interesting. So, in the first, I'm 3.5, 4 years into our business now. My wife's like, 8 years or so. But anyways, my point is that in that first year or so, I was very weary about giving up information. Like I was almost insecure of like, I'm probably doing this wrong and I do not want anybody else to know about it. But like, say, I am a business owner and I want to make sure I'm doing things right. Or hey, I'm making good money now. I'm ready to start kind of making my money work for me a bit. Should you go in there with full transparency? Is there something that you should be focusing on? Like how should that interaction go?
Yeah. And it's kind of to your first point, it's the professionals you surround yourself with of who you're talking to and your network. You want to, when you get to that point of entrepreneurship, you're going to need, an accountant,
Sure.
maybe a lawyer to help start up your business. And they're going to give you these tracks to say, okay, go down this pathway. You're going the right way. Once you step into the line of the money side of things, obviously your accountant's going to help you with the taxes and, your profit and loss statements and all these things that you about, on the fly. But then, my kind of job, my world is in the wealth management. So the next step is saying, okay, you're making this money and maybe you are saving it. And you look at, a little bit down the road and you say, okay, what does this mean? Do I need to save for retirement? It seems like 40 years away. Do I save for a house? What are all these different timeframes, and these goals that I'm going to try to achieve?
Right. It sounds like the idea that you should have going into these meetings is like, what are your goals? What do you want to do? Like a 5-year, 10-year, 20-year, 40-year plan, right?
Yeah. And it's my whole thing is keeping things simple, right? And
I love that.
Exactly. I had a client just ask about budgeting recently, and it's a big, scary topic, budgeting. You're going, oh my gosh, is he going to ask me about how much I spend on groceries and gas and stuff? No, it's not about that. I like to look at it kind of the end goal first, and then back my way into it.
Okay.
So, if your rent is, $500 a month or $1,000 a month, that's great, whatever, right? Take care of yourself, your food, your groceries, all this stuff. It's kind of, combine it into a credit card, a monthly dollar amount. So you go, okay, I spend this much on my credit card, this much on rent. It's pretty straightforward, right? Then you say, okay, how much am I saving per month? All right. Well, if I say, you know what, Derek, our goal should be saving $100 a month. When you go into this meeting, that's what I'm going to ask you. How much are you saving? I'm not going to tell you, hey, you can't spend money on this, you can't spend money on that.
Right.
That's not the whole goal. You're going to live your life well, and that's as you should. So if you can go into it saying, okay, I have a grasp on how much money I make and spend, that's really all you need to do is just keep an open mind and have some general thoughts about those types of things, those figures.
Okay. I mean, all this is making this seem like so much more approachable, right? I think there's something about in the investment world, the wealth management, whatever you want to call it, it seems like either people know it or they don't. There's no like real in between, it sounds like. Would you agree with that?
Oh, definitely. Yeah.
Yeah. It's really weird how that works.
Yeah. You watch the news, you see all the commercials, and it seems like you have all these things and you're going, what does that even mean?
Right. And all you hear are like these horror stories of people getting ripped off and things like that. We can circle back to this. Like you just started your own shop back in, was it May this year?
Yeah, May.
So congratulations on that, by the way.
Thank you.
That had to be a scary move. How's all that going?
It's great. It's the best move I've ever made, hands down. And it's been since May 4th. And so just in general, when you make a change out of the corporate world, I was in the corporate world at Bank of America and Chase for roughly 9 years. And so that's really all you know.
Right.
You're always being told something of how you should do it and what it's like outside. And you get scared and you go, okay, I don't want to deal with the outside because everybody's telling me that it's, this X, Y, and Z. And it's the same in every industry almost. It's you just have different terms for it.
Right.
Whether it's, some people say sales is sales, or, you can kind of talk your way around it. But anyway, so when you think about it, and then your manager at wherever you work isn't going to want you to leave. So they're going to tell you it's really scary out there.
Right.
And so
I always got the grass isn't always greener. That's what they used to tell us.
Oh, definitely. And that's what they need you to believe, right? And my parents, my family, I didn't grow up in a family of financial advisors. They were in construction. And so this was more of an entrepreneurial kind of family thing where my parents are entrepreneurs, my sister is, and we're all very creative. And when you're creative and you work in a corporate world, they don't always see eye to eye.
Tough. Yeah.
Especially with compliance and all these things in the investment world. They don't want to take any chances or any risks or anything. And, as you shouldn't, but when you go out on your own, now you're saying, okay, I can do this marketing, or I can do this podcast where I couldn't do it before.
Right.
And so there's a lot more creativity and stuff that you can build your own brand.
Yeah. Just kind of being able to control your own destiny. Right. And I love what you said about like the corporate structure and processes. It's like, this is the one way things need to be done. This is how we do it. Do not stray from this. And it's like, I mean, I get it because they want to streamline everything. And when you got thousands and thousands of employees, like you can't have everyone doing something separate. But the real truth behind it is that no matter what you're doing, there's multiple ways to do it. You know, find the way that works best for you and fucking go for it.
And it might be more efficient, right?
Probably is. Because not all of our brains work the same way. It's like we all have math problems, but sometimes people do it this way. Some people do it this way. Like there's many ways to, whatever you want to call it. So I love that. I want to kind of get back to the elementary side of all this stuff, right? So if we're talking about, the younger generation that's just jumping into the workforce, say the Gen Zers that are just jumping out of college, they're getting a job. Maybe their employer has some benefits. They match 401k. Like this was something that I remember for the longest time, my company offered, I believe it was 4%. And they matched up to 4%. And I didn't even fully understand what that meant, right? Everyone was like, free money, just take it. And so I signed up for it, but I never even knew what the fuck was going on, to be honest. But like outside of those kind of things, like, is that a good idea? What else should they be thinking about when they're moving past the paycheck to paycheck sort of thing?
Yep. So back to the original kind of question on when you go into this meeting with me and you say, okay, what does that look like in the budget? We talked about kind of expenses and income, right? Income and expenses.
Right.
Realistically, it's called mental accounting. And some people call it buckets of money. And really what you're doing is if you have student loans, if you have credit cards, balances, you have these things, well, that's one side of your balance sheet. That's your debts, your liabilities. You have the other side. You have your bank accounts, your assets, your checking account, your savings account, maybe an investment account, maybe a 401k, like you said.
Okay.
So generally, your first couple rules of thumb or your main targets are to keep at least 3 to 6 months of expenses in your checking and savings account.
Got it. I have heard that before.
Yeah. And the reason behind that is you can look at it as opportunity money. You can look at it as, if I lose my job or want to change jobs, that money, that's your opportunity. So if you're even COVID, right?
I was going to say the fucking COVID, man.
Like you're here now. Right?
Right.
If you get let go and you go, okay, well, the job market isn't hot right now because of COVID. I need to play this out for 6 months because I don't want to have to take a job. You want the flexibility to take the job you want. That's a good fit. So you don't want the cash in the bank to prohibit you from taking that right move.
Right.
So when you hear 3 to 6 months of emergency reserves, some people are more comfortable with a year, 12 months. Now, what does that mean? Well, when you go back to our balance sheet, our expenses, and you say my rent is, $1,000 a month, credit card bills are $2,000 a month. Okay. So now you have $3,000 a month. If you want 12 months of expenses, 3,000 times 12 months is
36. Yeah.
So now you're like, all right, I need $36,000 in my checking and savings. Now, is that realistic? Not a lot of times. Maybe it's like, hey, you know what? I want 2 or 3 months in my bank accounts, which could be $5,000 or $10,000. Everybody can be comfortable with a different amount.
Yeah.
And it's for the unforeseen, right? So,
I mean, it sounds like you just kind of have to take accountability for your own shit, right? It's like being able to, for the longest time, like I'm just talking personally, like putting down all your monthly expenses, understanding. So our first year running our business, at the end of the year, our accountant was like, hey, I want you to go through all of your credit card expenses, basically every receipt that you've collected, and break it down into different buckets, right? We're talking like something as simple as like, how many times do you go golfing this year? How many times did you guys eat out? How many times did you buy drinks? You know, whatever it was. And it really brought things into perspective. Not only like how much money am I wasting on dumb shit? It was just like, okay, like, do you realize that your monthly expenses are $1,500 more than you thought they were?
Right.
You know, like something as simple as that. And do you know of, is it just something like, should people be at the end of the month kind of going through their bank statements, or is it something that we like, how do you do it if you're keeping it simple?
Yeah. So back to our dollar amounts in the bank accounts, right?
Mm-hmm.
Let's say that your number was $5,000 and you want to keep 5,000 between your checking and savings at all times. Okay. So now you get to the first week of the month, and not a lot of people are going to actually look at a physical bank statement these days.
Sure.
You pull up your app or you look at your bank account, and if you said, I want to save $500 a month and moving forward. Mm-hmm. Well, if you look at the beginning of the month and you're still at $5,000, you go, I thought I was going to save that 500. What happened? Right. So then you go another month because maybe it was Christmas or something that happened and you went out to buy gifts and this one-off experience. Mm-hmm. Then February comes and you go, I'm still at 5,000, right? So that's at that point, you're 2 months out. You're going, okay, maybe I should check my spending a little bit and see if something's off. Mm-hmm. That's really the only time I would kind of get into the nitty and gritty of the dollar amounts of what you're spending money on. Okay. Generally, you're going to know if you're spending a little bit more on toys or restaurants than you did, the month.
Sure.
So that's where I go with it, is I kind of do that the last step, but I would always focus on, they say paying yourself first. So if you can come up with a dollar amount to say, okay, I want to save $100 a month or $1,000 a month, well, that needs to come out first. You pay yourself first, then you pay your bills after.
I'm glad you said that, because I think that was something that really started working in my personal case, was like, once you get paid, like put that money aside. Like it's never even been there. It's almost like it's gone.
Yeah.
And because then you're not missing anything, right?
Exactly.
You're not like, wait, I had to like take all this, I'd take this huge deduction out. And it's like, no, just have it like automatically. Like if you're a salary person, you know how much is coming in each week or each 2 weeks or every month, whatever it is, like just put a draw on there. So it's gone,
Yeah. And that's the whole idea with the 401k. So to your point on 401ks, if the company is going to match a certain percentage, for example, yours is 4%, that means that 4% of your money is going to go into this 401k, and then the company is going to put 4% into it as well, the exact same dollar amount. So in essence, it's the only guarantee advisors can make your money's going to double is if you do your match in your 401k.
Right.
Oh, and that's directly out of your paycheck. It's out of sight, out of mind.
Right. You never even see it.
Generally, that's going to be your first thing beyond the 3 to 6 months of emergency reserves is at least do the match in your 401k, because that's going to be the only guarantee you have in investments there.
Okay. I love that. And I think that's smart for, anybody. Again, like this is not just for young people. This is for everyone. So my next question is, this was something that when I first met my first wealth manager, whatever you want to call him, I'm no longer working with him. But the thing that confused me the most, and the questions I always got when I told people that I was working with someone, is like, understand how they get paid, right? And it seems like everyone does it differently. I don't know how you do it. I don't know what the general rule of thumb is, but is there something that, for the lay people, I guess, like an understanding of what to expect when walking in to meet, someone like yourself?
Definitely. So each company is going to pay their advisors or your brokers a different way and a different type. So there's also different legal ways that advisors work. So for example, there's 2 different standards that your advisors will work under. These are regulated by the government, most FINRA, the SEC, these different government bodies. It's suitability or fiduciary. Now, suitability means you could walk into this advisor's office and they can say, all right, Derek, how old are you? What is your income? How much money do you have in the bank? Good. We're going to put you in this investment. That's all they have to know. Now, that's one way. Fiduciary is a step beyond that. And that's what I am basically, as a fiduciary.
Okay.
Where I can ask those questions, but that's where you start. Then you say, okay, I have to think to myself, if I were in Derek's shoes, what would I do myself?
Right.
And so
that's kind of what we all want to hear, right?
It's that's like, what you want. Yeah.
Right. That's always the scary part. It's like, I would love the scary part is when you hear about these managers or these, advisors making money when we're not making money.
Yeah.
Right. It's like, I would pay my advisor buckets of money if I'm making money, right? It's like, it should be this incentivized nature, but it sounds like it's not always that way.
No.
Or at least,
So you have two main routes. You have something called a brokerage route, and then you have a advising route. And so what that means, basically, brokerage, let's call it annuities, let's call them mutual funds, even some stocks. Basically what would happen is you would walk in and say, okay, Marty, I want to buy this mutual fund or this annuity. The advisor would get compensated based off of that purchase or that sale.
Right.
And that's a one-time thing. So you have to be careful, because if you walk in and they say, I'm going to, put you in this and it's great, you're good. Well, now if that advisor is not going to get compensated again next year, well, he might have took really good care of you or she, but then next year comes and they're going, unless you're going to buy something else,
there's no incentive for them.
Not a lot of incentive.
Right.
So the other route is the advisory route. It's called assets under management. It's fee-based. It's fee-based, basically. That's what they'll call it. That's how I work under Black Horse Wealth Management. It's a percentage based off of your assets.
Okay.
So essentially, what'll happen, you can call it 0.5% or 1% or whatever our tier is for the fee, is based off of the investments that you have under management. So it's not like a one-time fee. It's not a hourly cost, for example, for financial planning purposes. It's basically saying, okay, look, if you have $10,000 or $100,000 or $1 million under management, it's going to be, let's say, 0.5% of a fee. So you take that $1 million, $10,000 balance,
sure, whatever the number is,
0.5%, and that's your fee. Now, what they'll say, you'll see some commercials. I think it's Fisher Investment, some places they'll say, we do better when our clients do better.
Right.
Basically, what they're saying is, well, if it's a percentage fee and your balance is going up, the fee is going up.
They're making more.
We're making more.
Right.
If your balance is going down, we're still making a fee, but our fee is going down. So our incentivized to do better for the client, because essentially at the end of the game, we are going to make more if you're making more.
Right. And I think the majority of people will be totally okay with that.
Right. And if, every firm has a different fee structure. And so one of the main questions that I would ask if I ever walked in and asked a financial advisor, name a bank or any institution, is, how do you get compensated, and are you a fiduciary? Right.
Right.
I am a certified financial planner. So under those terms, basically, I am also not only regulated by the government, but I abide by their fiduciary standards as well. So if you look up certified financial planner on, just Google it, essentially, you can look up they call them CFPs, that acronym, in your area. And those are the people that go through a very stringent test of a lot of different topics. There's about 6-7 different modules of taxes, insurance, investments, invest planning. And that's a really good place to start, because A, they're fiduciaries, and B, they're educated because they had to pass this very stringent test.
Right.
If you walk into any, bank or financial advisor, they might not know all of these topics. So they might have your best interest in mind, but
still not educated on it.
Educated as much, and you might be paying the same thing to that person or another person.
Interesting. Okay. That's really good. That's super helpful to know. Because I think when people walk in, they're just like, oh, you're an advisor. So we're all the same.
So, yeah.
Right. That's super helpful, Marty. I got one last question for you. For those who think they don't have enough to save or invest, like, what would you recommend? Because we hear that a lot, right? I don't make enough.
Yeah, definitely. I think it all comes down to your simple budget. It could be, you could save $50 a month, you could save $50 a paycheck, whatever that number is, there's an investment platform for you.
Right.
So, even call it, I think I just saw one, Chase, even Goldman Sachs came out this morning and said that they're going to open up these accounts for clients that have $50 or $1,000. A lot of times you'll hear them being robo-advisors. Robo-advisor means basically when you go on to your, let's call it, say you're a Chase customer. Okay. And you go into your online banking and it says, would you like to open an investment account? And you go, sure. And it says, would you like us to do the trading for you? Well, basically it would be a computer that says, all right, remember those suitability questions. How much money do you make? What's your age? What's our goal? What's our time frame? Then they'll do it all for you.
Based on some sort of algorithm that's going to.
Algorithm. Now that fee might be 0.1% instead of 100% because you're not getting any advice.
Right. And it's automated.
Yeah, it's automated. But if you're starting with $100, you might not need that much advice because you're not worried about taxes, trust and estate planning, all these different types of modules. So
right.
essentially a good place to start could be $100 or $1,000.
Yeah.
And there's a place for you. And then from there, what we were talking about earlier is just choose a dollar amount per month and pay yourself first. Instead of putting that into your savings account, once you get to that, let's say $5,000 mark, automatically put it into that investment account. That way you're out of sight, out of mind again, and you're doing something called dollar cost averaging. Dollar cost averaging is a systematic investment. So you're buying when it's low, buying when it's high. You take market timing completely out of the equation.
So so you just taught me something, Marty. I love this. So it's the idea of having that, emergency fund, whatever you want to call that, the X amount of dollars that you need in your account to survive 3, 6, 12 months, whatever it may be. Yep. And then anything on top of that, putting that into some, however risky you want to be, but putting that somewhere where it could potentially be working for you. I think that's super smart advice.
Correct.
I love that. Well, Marty, this has been super awesome. I love this. I'm learning stuff. I'm hoping everyone else is learning stuff. Where can people find you if they want to get in touch with you? Because are you able to, I know you're in San Diego.
Yes.
Where are you able to serve people anywhere? California? Yeah. What's the ruling there?
Yeah, really, I'm nationwide. So advisors basically can get registered in any state that they want to do business in.
Okay.
Most of my clients are in California. I have some in Nevada, Florida, around the United States. Cool. Obviously with COVID, we've had a lot of Zoom business. And so easiest way to find me would be my website, www.blackhorsewealth.com. And that's going to be the easiest route. And you can contact me through that.
Perfect.
Also to your point on kind of looking up advisors, you go to the Certified Financial Planner website and look up advisors. You can also go to the government website called FINRA. FINRA will do something called a broker check. Now, the last thing I'll say is when you go into meet an advisor, you want to look up their broker check because that gives you the history of everything they've done.
Oh, okay.
It gives you their work history, their residence history. It gives you any types of complaints that they've ever had.
Okay, so it's kind of a scorecard of some sort.
Scorecard, and it follows you. So if you want to look me up on FINRA, the broker check, the Certified Financial Planner website, and obviously my website will give kind of a background of myself as well. So
I love it. I'll link all these things in the video when I put it out. Should be coming out, January, something like that. But Marty, this has been great. Thank you so much for coming on.
Absolutely. Thank you, Derek.
Talk soon, bud.